Hello everyone, Bariki speaking from Trading Africa, and today I would like to talk about price action. And as we know, price action is a foundation, or is a heart of technical analysis. And I would like to invite everyone until the end of this session. If you are a beginner, worry out, because we'll talk a little bit of price action uh, today. And to start directly, price action simply is a decision. It's a decision process, especially in trading, in which traders make, generate signals or make decision based on what they see on the chart. Price action is quite different with using indicators, because we don't use indicators if you're trading price action, rather than we depend on technical analysis, more of technical analysis. First of all, we analyze the trend of the market. We analyze the market levels, which we are. If we are on demand zone or we are on supply zone. And also we take, we spend time also to analyze form of the candlesticks, especially for those who are trading by using candlesticks charts. And I believe it's one of the most preferable charts in forex market. But moving forward, also we will look the advantage and disadvantage of using indicators on this session also. And the other thing we'll try to highlight is how can we trade effectively by using price actions. We'll see if the time will allow us to do, or maybe will be the for the coming session. But for today, let's try to highlight some of the key aspects on price action. The first thing you need to know is a market direction, or is a market trend. You need to know if the market is trending up, and you need to know also if the market is just trending down, just have a downtrend, or maybe if the market is moving on a sideways move, meaning if the market's just consolidating, it's not moving to any part, to any direction, rather than it's just bouncing from the support level and resistance level. So start with an uptrend. Simply, we know that the uptrend always it's a movement, it's a market movement. This is a bullish trend on the other language, you can say. But we know that in an uptrend, we need to see the market forming the higher highs and sometimes the higher lows. And you can see the market forming the higher highs and sometimes forming the higher lows as one of the characteristics of an uptrend. But with a downtrend, we need to see the market forming the higher lows and lower lows. But remember, for the sideways move, we don't have any defined direction of the market, rather than the market will sometime will keep bouncing from the support level to the nearby resistance level. So you may find the market will keep just consolidating for a while. There is no imbalance, rather than the market will touch the resistance level. Then we can see there is high supply, then the market will push down once again. But something to note here, it doesn't mean it have to move just quick or as fast as we can see here on the chart. Remember, we are on a monthly chart here, so you can see here there is a high. We have it's a bit long time, because this is 2009. We see this sideways, all this consolidation when start, and it lasted until we can see it is 2016. So it's almost 6 years, just the market consolidating on one, just moving sideways. So you can see it's not something happen overnight or just over the week. It depends on the chart you're looking. So if you go to I mean, if you go to lower time frames, you can see also the many other opportunities showing up on the market. So for someone who is depending on a daily chart, just one candle is capable to show you how the markets, how the traders reacted for 30 days. So you can see that there will be a lot of opportunities for buyers and sellers. So we are using the higher time frame for training purpose and for showing especially new traders where we can start sometime, because we prefer mostly the top down approach. The best way to show you a large image, show you a big image on where we are and what do we expect maybe for the coming month. If you need to see far, you need to look on the higher time frame. Okay, and for price action, actually, there is a big difference between using price action, pure price action, and using indicators. First of all, price action traders, in most of the time, get in quick to the market and get, the signal so fast, and but also they realize the exit points so fast. For instance, I may try to apply the indicators to show the difference here. Here we are applying the moving average, which is moving here. You can see this difference, for instance. And if you were following this trend before, you can see this was just an uptrend on GBP USD, but you can see this the reversal happened on exactly on the previous resistance level. But what's happened, the moving average reacted very late. It's almost 10 days plus or 20 days. Then it shows you that's the market is going up. That's we see the cross of the moving average. But also here you can see the right, you can see clearly how the moving average, these indicators lag behind, because you can see there was a high, we see there is high sell, it's a breakout here, and we see the break of the support. And what's happened here, the break of resistance, what happened here, we see there is a high reversal. It's almost 2 months, and it's when the moving average reacted. So we in trading with price action, we don't much depend on looking on these indicators, because and it doesn't mean we don't even depend, but we don't consider using these indicators, because in most of the time lag behind, or give you false signals and so forth. But you can see here also this moving average keeps showing that the market is selling, but you can see there are some pullback. So there are some of the traders get in here and then buy for almost 2 months, and then the market sell. But you can see the moving average showing you the market is just selling. Okay, we are not today specific dealing with these indicators, but I'm just trying to show you the advantage of using pure price action versus using indicators. Well, what also to consider in trading with pure price action is we need to find the confirmations, and confirmation is not something so new, rather than we are looking on especially on candlesticks, for those who are using candlesticks to trade, or for those who like to learn about candlesticks. I would recommend you to go and search for books or weather looking videos for candlesticks, because candlesticks are the most popular types of charts, where it helps us to get some many informations as traders. Because if you try to look on what you see on the chart here, we have candles, and candles have wicks, and these wicks once appear on support, I mean on our levels, especially resistance or support levels. Okay, I know you may be asking yourself some of the few questions how to become a pure price action trader. First of all, you need a clean chart, actually, like this. We need to remove these indicators on the chart. Make sure that you have a clean chart like this. Choose a right time frame which you think you're comfortable with, but remember to say remember to use the top-down approach on the charts. Once we say a top-down approach, we are talking of using the higher time frame. You need to start learning to analyze the market on higher time frame. For instance, here we are on a monthly chart. Maybe you need to determine the support or resistance, because you can see here you just have this was acting as the support here, maintain the market hold here as a support level, and what we see after some time or after some years, we see the same level, the same support level now change to become the resistance. So we can see there is a change of polarity in the market. And then let's try to switch this lower time frame, which is a weekly chart. Still we can see the same thing happening here. That means this as a resistance level for this level. And for those who like to learn about patterns, we can see the double top here. We see the market also maintain the same level, still holding this level, and as I said, but also on the weekly chart, we can draw the other level, which we see here, to determine the next support level. And you can see the market reacted clean. You can see this clean area, and you can see the other level here. The market, remember, is more historical level. We can see this happen on 2000. This is the first touch, and we see the second touch of the same level on 2019. So almost 3 years. And now what we see in 2020, we see there is a break of this level. So these are some of the advantage of using typical price action, because we must look on the levels. You know, we depend typical on price actions. We depend on charts. Sorry, and we depend on these levels. Our decisions governed by what we see on the chart rather than what indicators showing us. For instance, if I can apply just an indicator like Ichimoku, you can see how this is crazy. You can see how these indicators will make you confused, and you will not make sometimes clear decision. For instance, we see the Ichimoku here is showing showing the bullish momentum, meaning it's giving you a signal to buy, but look what's happened. And this also showing you is a sell momentum, but at which time this happened. So you can see in most of the time, indicators will kill you. I mean, will block your vision on the market. So it's a quick advice: train your eyes, because most of us, we are so motivated and we lack discipline. So you better have discipline rather than being motivated in the market, because it need an investment. You need to learn some patterns. You need to know which type of candlesticks once appear in the market give you some signals whether to buy or to sell. So it's an investment of time rather than being motivated to make more money. No, trading take time, and the way you invest your time in a right way will determine your direction in trading career. So moving forward, as we have this chart, let's try to check on a daily time plan. The same chart on the same level here, we see that we have a break, because we have this first touch and then we have the second touch. But let's assume we don't have this portion here and we are dealing with this level. We can see exactly the magic of price action, the discipline of knowing how to trade this price action, because look how this just one candle, a 24 hours candle, I mean a daily candlestick, showing you this long wick as a pin bar candle. You can see this, what's happened after that, and we can see the other level forming on top, meaning to showing you that still this is just the pullback, and then the market continue rallying. You can see the market continue pushing up for many days. So by saying so, I would like to invite you on the coming session where we will try to highlight the reversal signals and reversal patterns on the markets. For today, we are just doing an introduction of this session, and I believe the coming session will be more productive and more educative. So stay tuned, and welcome to Trading Africa. Bye-bye.